You have Adani Group of companies that are a buzz in trade. Anushi, what is it that you're picking up? A good update that we're picking up so far.
A bunch of operational updates here that we are looking at in terms of the overall Adani portfolio, be it in terms of EBITDA, the gross debt levels, the cash flows. So let's just break this down in a sequential manner. Firstly, if you look at its EBITDA, it has reported about a 17% growth, and this is at $10 billion that we are seeing in. So what does this mean is strong EBITDA growth levels have sustained. Cash flows, if we look at, that is about $7 billion for the last 12 months. If we go back to the last 5 years, we've seen about a 30% of a growth here. So growth in cash flow from operation is strong and has sustained. Net debt to EBITDA is around 2.46 times, which is below what the company has guided for, and this suggests reasonable levels for asset-heavy infra companies as we speak. So with these kind of cash flows and net debt levels, the liquidity position is an advantage for the company. So they have sufficient funds to cover all their debt repayments for the next 12 months. What it means again is healthy liquidity to cover these debt repayments. Coming to the asset base now, that has moved from $9 billion to $60 billion in H1 of FY25. During the same period, the gross debt has moved around $2 billion. So 80% of the base that we are seeing is funded internally and not through debt that we are looking at. Equity now accounts for about 63% of the total debt that we are looking at, showing lower dependence on debt. So what is the main concern is again on the exposure to Indian banking, which stands at about $11 billion. This is 42% of today's debt. So companies have cash of about $6 billion, which is parked with Indian banks. So net exposure to Indian banking is much lower than what is perceived. It is lower than, with about 50% of the debt still lying with Indian banks. So this is overall the picture which is building on Adani portfolio. But with that, let's go across to our guest for today, joining on our show, which is Sharmila Joshi of sharmilajoshi.com. Hello and welcome to the show, Sharmila. Firstly, let's address Adani stocks. They all are in focus, up in trade today. What is your view? How do you make about these Adani enterprises and the group stocks in focus?
Well, honestly, I think when we got the news of the indictment, I think the key concerns were the areas that you highlighted, and you saw a knee-jerk reaction on that. I think even when you saw PSU banks correct, you knew that it was an overreaction given the size of the banks. I mean, if you look at the size of SBI and their exposure to the Adani Group, then the reaction seemed totally more than required. And I think market has known for a while everything that you outlined in terms of the kind of profitability they've shown, how they've been able to bring their debt down. That said, I think there is no taking away from the fact that this piece of news has the potential to become become a negative for the company going ahead. But that also I think market understands it is a long way off, and if it happens at all. So, there are too many ifs and buts. So I think what the reaction that we saw was largely due to the fact that A, the news was bad, and B, market doesn't like any kind of uncertainty. And we are in that sort of period where you react to bad news and sort of factor it in. And I think that has happened. So from here on out, I think it is business as usual, and you will look at stocks on an individual basis. And I think that, the stocks that I found overvalued earlier, those continue to be overvalued within the group. And the stocks that I would continue to focus on would sort of remain the same. So essentially, we are talking of like an Adani Enterprise, Ambuja Cements, and the like.